Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a brand new CEO interview, brand new company. And I came across this company, was it 2-3 weeks ago?
I think it was a Sidoti or one of the conferences.
Yeah, it was one of the conferences. And before the conference, I went through and this one's kind of hopped off the page at me. And Sobrsafe is the name of the company. SOBR is the ticker symbol, and it's traded on the NASDAQ. And David, how do I pronounce your last name? Gandini?
Gandini. Like Houdini, but Gandini.
Gandini, got it. And David is originally from, where are you from, David? Detroit,
Michigan. Yes.
I don't know what it is. I always seem to connect with I'm from Ohio, and I always seem to connect with the Detroit guys. I don't know why that is.
Because Michigan's better than Ohio. It's so flat, and the police are everywhere on the freeways.
I'm not going to argue with you. I left Ohio a long time ago. So, David, Sobrsafe. Before we go there, give us a little background on who David is and some of your background.
Yeah, sure. I've been involved. I started in the startup space when I was 25 years old, and I got together with a couple of individuals, raised a little bit of money, and it was all around telecommunications. So my degree was in telecom, and I got out, and it was at the time when the long distance companies were being challenged by alternative providers. And there were 7R Box, and AT&T was the long distance provider. And so there was a tremendous amount of opportunity. So those of you old enough to remember that was a significant opportunity that started somewhere in the early mid 80s and continued on till the late 1990s in the companies that were built. At one time, there were about 550 long distance companies. They sold out, and now you're back down to single entities now. So I started in that space, and what I'm really interested in is the opportunity to create something and the challenge to do things, whether it's business or personal, whether it was athletics. I mean, I was a Division I athlete at Michigan State. I had a full scholarship. So everything to me is about earning, getting what I earn. And so I started in that space and became pretty intrigued with it. That particular company, as a startup, was underfunded. And I ended up, maybe spending a year there. But what I learned a tremendous amount. And from there, I went into other sales jobs, but got back into a startup company when I was 27 in the fiber optic space. We ran the table at that company over 9 years. We sold that to Phil Anschutz, SP Telecom, which the company is now Quest. And everybody knows different stories about Quest, but that was my second entree. I had some success. And I've done about 3 others since then in different spaces because I lose interest in doing things for a longer period of time. And I always want to try something different. So I went from, that particular startup to a fiber optic startup. Then the next startup I had was a company called Pace Network Services. And that was in the SS7 signaling space. I started that company, sold that company within 2 years. And what I did with that company, SS7 signaling, is back in the old days when you dialed around to make a long distance call, it took about 20 to 25 seconds for the call to connect. The SS7 signaling company took the data, took the digits, put them into a packet and sent them down the network so the call would connect faster. So a 25-second call connected in 4 or 5 seconds. And at the time, there were about 500 long distance companies, and we sold that technology to connection to these long distance companies. And we were very, very successful, including AT&T was one of our customers, which when we started to get AT&T was incredible. So we did that. So I was in that space. And then I had a 2-year agreement with the company ICG that acquired me. And then from there, I went to the outsourcing space, like early on, pre-cloud. And we all know cloud is a building down the street. But I got into the outsourcing space. We built a company. We raised about $250 million, took the company public, and it was right around the time of the crash, the end of '99, early 2000. And so we didn't have the level of success that we had all hoped because the market had changed on us. And then from there, I went into a company that did credit card. It was a small company, a couple $1 million. They did some credit card. Visa, Master, Amex, they did some credit card work. And we took that company in like 5 years from 2 million to 50 million. And that company then was sold. So I just startup, different technologies, but it's all the same. It's all, raising money, building the appropriate team, making sure that you have a market that you can sell into, making sure that there are competitors in that market. And again, around the service side. So I took after that deal, I took a little time off, did some consulting, and then I decided that I wanted to get into raising money and be in the venture capital space because I'd never done it. I've done it for companies. So I found a company in Denver. I met a guy at lunch. He said to me, "You look like a jockey." And I said, "Is that because I'm short?" "No, you look like you're a jockey. You can ride a horse. I'm looking for a jockey." So I ended up working with that company, First Capital Ventures, started raising money for a couple of different technology companies, one medical technology company, and then the company Sobrsafe came up. So I started to raise some money, and I was really excited about what they were doing because they were at the time, they wanted to be in the mandatory space where they wanted to create this device where you could, determine BAC, and they wanted to be in the space with breathalyzers and ankle monitors. And that's a very, very tight space, tremendous amount of competition. And so I said, what if we could just use this device as preventative to detect alcohol? And then we kind of took over from there. And then about, I think it was raising money for about 6 or 7 months. And I ended up then taking over the company as the chairman CEO, fired everybody that was in the company because they were not getting the job done, brought my own guys in. And, $29 or $30 million later, here I am, with the company and a couple of products. So I love startup, but this one's different, Timmy, because we can make a difference and we could be game changers. And if you just see recently, I think in the last couple of days, the U.S. Navy out of Norfolk, the Ike battleship, in August, they're going to start testing for alcohol when these individuals are on and off, these Navy guys are on and off the boat. So everybody's starting now to realize that this is a major problem. And if you look statistically, 50% of all workplace injuries involve alcohol. 15% of all workplace drivers on the road admit to drinking. So it's a massive problem that was even exacerbated by COVID. So we're starting to gain some traction in various markets, but with a specific focus around fleet facility, rehab, and then we call it the justice space. And so I'm sure we'll talk more about it. So just fascinated by opportunity.
Let's break down exactly what Sobrsafe does, right? So it's not a breathalyzer, it's not a blood analyzer, it's what?
Yeah, so the technology that we've developed, if you're drinking, you through the vapor in your fingertips or your wrist or your arm, your leg, you would emit ethanol, alcohol. And so what we've developed is a sensor that senses for ethanol and then registers that with the device into a dashboard and in a data backdrop. So the first device, the SoberCheck, is a larger kind of a mouse you put your hand on, and we do biometric identification. And then based on the vapor from your finger, if there is a presence of alcohol, it will register that. And what the companies, most companies have zero tolerance policies. So what we're doing is we're the front line preventative partner with them. And if somebody tests positive, then they go through whatever the protocol is that they go through. So there are specific markets that have more problems than others, but that's in general what we do. With the band, it's the same thing. You wear the band. There's geographic location where you are. And if you're drinking, it reports that information where you are and if you have alcohol in your system. And the most likely place for us to start is really, truck drivers. And then secondarily in the rehab space, which is, we tried the same methodology over and over again to fix this alcohol problem. And there's some scary statistics there. 70% of all individuals that go into rehab go back in the first year, 99% go back in 4 years. So what we're doing with ours is, hey, you drink, you don't want to drink, signal goes to a telehealth professional. They call you up, hey, Dave, what's going on? How can we help? And hopefully we can reduce recidivism. So it's pretty basic in how it works. And again, we're the only company doing it today. I'm sure there'll be others in the future, but right now we're the only company in the world doing what we're doing.
So I think what's really unique to me, and I think is kind of your company's slogan or something, right? I mean, why do we wait until after an accident happens to have somebody tested, right?
Yeah.
And then workman's comp, whatever, right? They get in an accident, first thing you do, take them down for a drug test, right?
Right.
Why not test them before they get on a vehicle or a forklift or whatever and hurt somebody? Right.
But that's the process, right? I mean, look at where the opportunity is. In this country, we tend to repeat the same thing over and over and over again. It took us maybe a year for companies that were in the space doing the after the fact testing to really understand and to get how powerful the product is. And we're making traction now, but we're just a major difference maker now. In a space where, and again, I'll go back to the Navy. When you see something like that occurring, there's a problem. If the Navy's going to start testing the sailors, there's a drinking problem, right? So it's all starting to get together for us, but we're also making significant traction on the sales side.
So let's talk for a minute here. I mean, here's another really interesting subject is that you were able to uplist to the NASDAQ. You're not an OTC company, even though
we were for a couple of weeks or a couple months or something. Yes,
but you have no revenue to
speak
of. Yeah.
Right. We haven't reported any. So so just to go backwards, the company was dormant when we acquired it. It was on the pink sheet. On the pinks, we, over the first maybe 6 to 8 months, validated the technology, went through the patents. We then moved to the OTC, and then from the OTC, we moved last May to the NASDAQ, which was kind of part of didn't know how difficult it was going to be, Tim, but it was kind of part of the strategy and how we could acquire the company from all the majority shareholders who thought they had some value and nothing ever worked. So that was kind of the that was the deal. And so we had to honor that deal. So that's how and why we got to where we are in the NASDAQ now.
Okay, so just recently, like within the last few hours,
Yes.
you finished another financing deal, right?
Yeah, it's our third financing. So the first one was in May, and the first financing got us uplisted to the NASDAQ. And I think if your guys look at our track record and our background and the sequential dates, we raised money. I think we were May 20th, and it was the third worst day in market history since 2008 in the financial markets, and we made it up. We wanted to raise at that time 12 to 15 million because the markets were so volatile. We ended up raising 10. So we went back in October and we raised 6 million in a pipe, and that raise took about 2.5 hours. The first raise took about 5 months. So we were starting to gain some traction, and then we had debt that we had raised prior, and rather than paying off the debt, because now we've got notoriety in the markets, we've done everything we said we're going to do, we've got traction, we're doing everything we said we would do. We were able to get a really good, fair deal to replace the debt that we had, to extend our runway even further, and then give us the opportunity to put some additional enhancements into the product sets that we have. So we've been very fortunate.
In this market, I would say extremely fortunate, right? Because this is a rough market right now. If you need money, this is a very, very tough market.
Yeah, we've noticed that for a while, but yeah,
right,
I think the product stands on its own, and I think the more education that occurs and the more things that happen in the space, around drinking, accidents, deaths, things like that, the more investors we're going to bring in to support us longer term. And I will say that we have a very sophisticated IR plan and how we message and who we message to, and we track our investors on a weekly basis. And we're really moving now to more small family offices and wealthy individuals that are taking larger positions because they see the future and what we're doing. So we're extremely pleased by that. And that also gives us some stability with the stock price as we go.
I think so. When you and I first talked, my big thing for this year is let's focus on our needs and not our wants. And anytime that saving a life potentially is part of that equation, safety or just improving safety in general so that people don't get injured, right?
Yes.
I think that's a need. Would you agree with that?
Yeah, I 100% agree with you, which is why we're in this. But I'm telling you, it's so gratifying to see these emails that we get in from some of our investors that have lost loved ones, that have had loved ones involved in rehabilitation for over the last 4 or 5 years, thanking us for bringing this to market. So it's really fulfilling, gratifying for us, because we do, at the end of the day, we have a business, we need to make money. All of us want this. All of our entire executive team, we want to make our mark on society with this company and have a legacy that what we've done and what we've contributed has, created safer roadways, safer workplaces, and saving lives. So it's been spectacular over the last 90 days, talking to some of these investors and hearing them out and how happy they are that somebody is finally doing something. So.
Let's I want to talk about the product. How accurate is it compared to the breathalyzer and blood?
Yeah, so we use transdermal technology, which will never be 100%. Never will be 100%. The only way to determine BAC is to use blood. I mean, blood's the gold standard. So breathalyzers, depending on what you read, they're plus or minus 10 to 15%. I think the number is probably 83 to 85% accuracy with breathalyzer. With our technology, with the SOBR check, we're 93% accurate today. Now, we've got a third-party validation coming from sponsored by the federal government. We'll have that report probably in the next 30 days. And that will compare us to various breathalyzers. And so far, the results are awesome. I mean, the devices are performing phenomenally well. So we'll have an additional third-party validation, which is always helpful as we move the business forward.
So when we talked, I asked you guys what you felt the TAM was on this, right? The total addressable market.
Well, the total addressable market is everybody, right? Everywhere. But what we're doing is we have to maintain focus. We're extremely focused. So the market right now that we're addressing would be the facility fleet market, the rehab market, and the justice market. And I want to say, what's the total TAM on that, Justin, numbers wise? Yeah, we'll refresh. I'll give you that number, but I've got my VP of communications. He's got all the data, so I can give you that in a little bit. But it's a pretty significant market, and you know the alcohol problem, Tim, is about 249 billion.
When you talked to me about this, and you guys gave me a number when we first met, and the first thing I thought was you guys are thinking way too small, because I just look at the car manufacturers and say, you get in your car, you grab the steering wheel, and you're emitting alcohol, your car doesn't start, right?
Yeah. Yeah, we could talk a little bit about that. That's kind of a separate market, but back to your original question, about 10.5 billion, the market that we're chasing right now.
That's small, because what? This is a global problem. This isn't just a United States problem, right?
Yeah, yeah. So let's talk about that. That's kind of a good question on how we're going to achieve success in the markets and then beyond. Now, do we put the release out? We did. So this is interesting. So you talk about fleet facility. We just put a release out, I think last week. We signed an Indian reservation. They're going to be putting us in all their free tests for all their vehicle drivers, for their police department, things like that. Now, that's a massive space, right? So we've kicked that door open. So one would think that once we're installed, we installed last week, there's going to be council meetings. This is a huge, large corporation. So we expect some success there. We didn't even think about that. We weren't aware of that market a few months ago. But here's the strategy. We've got 4 sales guys right now focusing on those markets. We're also working on licensing with other companies, because the way we get there, Tim, if you take a look at telematics space, there's somewhere around 17 million devices installed. They're tied to insurance. Every company that has drivers uses them. What if we were able to Bluetooth into that technology? And I'm not promising anything, but what if we were able to do that? We could gain market traction significantly in large chunks. And so we are working, with several companies. And the latest individual that we hired out of a sales guy out of Tennessee, he spent 8 years with Zonar. Zonar is in the top 5 telematics companies, and he's already moving forward, having discussions. So how we'll really expand is licensing. So the focus, traction in those three markets, and then licensing. And then we've signed 9 distributors, which represent about 500 customers. And these distributors, Tim, are focused 100% on drug and alcohol testing. So they were fully signed and trained in the fourth quarter. We're starting to see some fruits of those distributors and what we trained them on. And we're talking now, we're positioning them with their customers and doing proposals. So distribution, licensing, direct sales, and then, who knows what's going to happen from there. So right now, that's how we see the world today.
Equipment is one piece of it, but then you've also got a software component, correct?
Yeah, so we with the equipment, we sell the equipment, and with the equipment is a long-term agreement. It's an Evergreen Agreement, and it's a SaaS model, and it's either a flat fee based on the customer size or $30 per employee per month to use our technology. And then, the margin eventually will be mid 80%, but right now we got to load customers on the network. So it's about an 85% gross margin once we get some customers loaded. And again, like I say, Evergreen contract. And, we announced, 4 weeks ago, maybe, the customer, TerraTech. They're huge in oil and gas. And we're going into 19 locations with that company where they're testing, all their drivers and their field workers. And in that space, in oil and gas, 26% of the workers in that space admit to binge drinking, which, you and I probably would too if we were standing around that pump all day, right? But the point is that That's another huge door open to a huge market. And they have safety dollars because that's how these guys survive and stay alive. Their liability insurance is significant. So that's another door that's been kicked open, and we're focused on that market specifically as well. But there's just a lot of new things that are happening that kick some doors open, and we're excited about that. But again, the oil and gas space is significant.
Why wouldn't any insurance company say, look, you use this product and we can lower your premiums? Right.
We've had customers receive discounts early on. We announced it about a year ago. And the problem is for us right now, with a sales cycle of 9 to 12 months and everybody's insurance coming due once a year, we're talking to insurers, but we didn't want to spend the time at that point to try to get traction and sign customers. So we moved to the justice space and the fleet and the rehab space. But we are working with insurers, and we feel the easiest way in for us will be with the self-insured groups. We're talking to 3 of them right now. They're all excited because they all have high deductibles. And in this case, they have safety dollars. So if they put our technology in, obviously they could lower the deductibles, but that's probably our fastest route in to self-insured. And we're in that process right now, but it'll take time to get in. I mean, they do what they do. They do the same thing. All these insurers have technology groups, but they don't want to change. The thing about this, giving discounts, I mean, my insurance goes up every year. I don't get a discount. So I think part of the issue is giving away some of the revenue that they have. So it'll take time. But again, if we keep the door open on the self-insured side, then someone will follow it at some point. But keep in mind, though, Tim, we've really been knocking on doors, and we're fully funded as of June 1st. So everybody sees, the company's been public for a while, and they look and say, well, what are you guys doing? How come you don't? I mean, we have a significant amount of signed customers right now, but we've only been at it for 8 months. So we're getting to that point in the sales cycle where we're closing. Let me just go backwards. The justice sales cycle is 3 to 5 months. Facility fleet is 9 to 12 months. And what we're seeing in the justice space is we've got a lot of these companies coming to the end of the sales cycle.
Let's talk about the justice space. So when you're saying justice space, you're talking about halfway house.
There's two areas for justice. The 2 areas are, first, probation. You get a DUI, you got to go to meet your probation officer once or twice a month. Today, what happens is you call in, they give you a color, and you go take a urine test, and do a breathalyzer, right? So what we're doing now is we replace that with, you go in and put your hand on the device. And if you fail, then you go through whatever that process is. And what that does is, our devices, we haven't talked about this, 10 seconds or less. Breathalyzers are 45 seconds to 2 minutes if you do it properly. And then I'm not blowing on you when I'm blowing through this device. And with COVID and all the other issues, it's unhygienic. So we're super hygienic, high speed, and we're in 2 locations right now doing that. And then the halfway house or the work release program, they do the same thing. Give you example of our customer in Montana. They had, at the men's facility and the women's facility, they had 4 entry points with a window. Somebody has a mask on the other side. The individual comes in. Every time you enter or leave, you've got to check out or check in. They hand them a device. They blow into the device. They show their identification. Somebody types something in. What is that? 3 minutes. Now their identification is biometric. They don't show their license. They put their finger on. So what was happening in 3 minutes is happening in 10, 15 seconds now. And it's safer. And again, we're in those 2 locations in Montana, and we're just now knocking on doors with the other hundreds and hundreds of those locations to get them turned. But you got to have customers. We're in the innovative cycle of disruption, right? So we're about halfway through that. The only way you get to the early adopters, you got to have customers. So that's where we're signing customers so we can move and pivot to that next phase of the disruptive cycle.
Right. Then you get pulled in instead of trying to break in.
Absolutely. Then you have customers. Who's using you? Well, here's my list. 8 months ago, it was I have no one. So you know how that goes. You're trying to sell something. So anyway, we're transitioning well. We're following the cycle that we expected to follow. So things are going well.
So just to reflect, you've got a track history of getting involved in companies, and sounds like for the most part, almost all of them were sold at some point, right?
Yeah, I mean, you can't. I'm not batting 1,000. No one is. I think three out of five over the last 25 years. Yeah, and no complete failures, but 3 out of 5 successes. Yes, you can't. If you're winning them all, it's not real. You never
Right,
win
it's
them
not
all.
right. But you've learned a lot from both experiences, right?
Absolutely, yeah. And here's what I'll say about what's happening today. And a lot of CEOs, they tell a lot of stories. And again, one of the reasons why we've been successful is that everything I've told the investment groups we've done. For example, the deal that we just did today, completed today, that particular fund, good size fund, was in the first deal and the second deal and this deal. There's a small partner in this deal. They're in the first deal, they're in the second deal, they're in the third deal. I'm talking, these guys are these are big funds. So we're doing what we say we're going to do, and it's paying off. But the thing is that's key here, I've got the best, it was, I said with CEOs, they say, we've got this, we've got that. I have the best management team I've ever had in my career. I've known one of the guys, VP of Ops, for 36 years. I've been with my CFO on and off for the last 10 years. And everybody what's the key to success? Finding great guys or great people that stay in their lanes and do their job. The minute you have somebody come in and say, well, I'm not sure what Tim's doing in sales, I mean, no, I mean, that never works. So I've got the best management team, and everybody is banging on all cylinders, and everybody's aligned to do what I said earlier, to prevent and to save lives. Great group of guys.
And that's so anybody that's been following me for a long time, I think if you want to succeed in investing, one of the biggest lessons I ever learned is that you can have a great product, you can have a great service. If you don't have great leadership, the odds are stacked against you. And
if you don't have a great team. Another example, the Chris, our new sales guy, Chris Burton out of Nashville, he was with Zona for 8 years. He won the Salesman of the Year award in January. He resigned a week later and came to work for us because he said his background and what we have, he can retrofit our technology on top of his base. I mean, every guy we hired, we plucked from a company. We didn't hire. I think we went through 400 or 500 sales guys to find the guys that we have, because we weren't going to find sales guys without jobs. Mean they're not going to make their numbers. So you got to find the right. So every sales guy's plucked from another company. They weren't on vacation somewhere. They didn't have a job. So I think that's
something
important.
Sales guys. I mean, this is something that, for me, when I was doing sales, I had to believe in it, man. I mean, I really had to believe in it. Right. I couldn't just go out and blow smoke.
Right.
This is something that you can get behind. Right.
Absolutely.
You're on the right side.
Absolutely. Yeah. We're all behind it. We all believe in it. We've had some moments through development, over the last 2 years, but we're extremely excited. Everything's working fantastic. Customers are happy, and we're on our way.
All right. So what do you see as potential catalysts in the next, actually, before we go there, let's talk about the share count. So what is the cap table right now? I mean, how are we looking?
I think we have right now around 12 million, right?
14 outstanding.
14 million outstanding. Okay.
11 in the float.
11 in the float.
31 fully diluted.
31 fully diluted.
All right. 31 fully diluted, which 31 million shares is nothing. Anything under 100 million shares, I feel that is a what do I want to say? A thin stock, right?
Well, every time I see another 100 shares, I get nervous, but I got you. Yeah. It's all driving. You got to drive activity. The more shares you got, the more activity you got to drive. But no, I mean, and a lot of those are closely held as well. So we're not that concerned about it. There's a good chunk that are closely held, probably 5.5, 6 million are closely held by affiliates and, and management. So,
and you don't come across to me as a guy that just wants to be careless with money and just dilute and raise just for the fun of it.
We have a very specific KPI strategy. We have a budget. We manage a budget on a monthly basis. If you go over budget, that money comes out the next month. I mean, cash is gold to us. And, I hate paying commissions and raising money too, but that's the way it goes. But now we have a tremendous fiduciary responsibility to the investors and to the company and the team and the board. So now we've done this a number of times, so we understand we will not get over our skis.
So insider participation is good.
Yeah, yes, it is. We all invested. The management team invested in the last couple of rounds, so we're all in the game. I invested myself in the very first round, which we raised $1.4 million, $1.5 million. So, and I just had dinner with all the original investors, not all, 4 or 5 of them and their wives the other day when I was in Detroit. Those guys represented about 800 grand, and they were all patting me on the back, excited because they were in at 50 cents. So it was a good dinner. I was able to digest it and leave in one piece, but it's been a great path.
You're not doing this. I think you're doing this because, you actually said it earlier, which I think is important to highlight. Yes, you want to make money. More importantly, though, you want to have a legacy. You want to have an impact on society.
Yes.
A very positive one.
Yeah, we all do. I mean, this is a great moment for us. I mean, and again, all these articles, everything that you see that's happening out there that kind of supports what we're doing, I think we're just getting stronger and stronger, and the recognition is there now from groups outside and customers outside of Sobrsafe. So the first year was tough, and the last year has been very, very, very fruitful for us. And again, everybody's recognizing in these different sectors that alcohol is a problem.
Listen, and I think, and you said it earlier, as you become more and more well known, and and somebody out there that really has some influence. I don't know if that'd be like an Oprah or an Ellen or something like that finds out about you guys. You guys could be in a heartbeat on a whole new path, right?
And look, you and I talked about this before, and you had asked me a question about acquisition. I think, to me, end of the year when we have significant traction in these market sectors, we've got this third party again, our second third party validation. The bans are on, and the bans are coming out shortly. The bans are on these rehab individuals, and again, it's with these new rehab providers that have a different angle rather than just putting somebody in a room for 30 days and drying them out. That is starting to grow. The insurance companies are starting to support these. So as we get more notoriety in these different spaces, I see, a company that has an extreme distribution organization and sales organization adding us. So we've already had companies reach out to us to add our product to their staff. And I think that's where we see the hyper growth in the future. But we've got some great things we're going to talk about here in the next 3 or 4 weeks that'll really excite people in terms of expansion. And I think everyone will be super surprised and impressed with some of the things that we've got going. So I would say stay tuned to see where we're going here in the next 3 or 4 weeks. I think our investors will be really excited about what we're doing.
So
we never stop. We never stop. We go, and we're excited.
Did you do it? Was it an IPO? It was a full-blown IPO, or was it a reverse merger? What was it?
It was we acquired the company, and then we did because we were public, we did an list. So there was no 6 months talking to banks and things like that. It was a over the night up list.
Okay. Anybody covering you on the street?
The only coverage that we have right now has been paid coverage, and so far I think we'll see some breakthroughs over the next quarter. But Jim, what we're told is until we give revenue guidance, nobody wants to cover us, and that could be inaccurate, but that's what we know right now. So all the research that we have out there is all paid research.
Right. And look, I have my own view about paid research. That's why I do what I do. Yeah. I am interviewing you because when we first talked, first of all, the product got my attention. I see a massive TAM. 10 billion is a lot, but to me, that's a small number because I think it's much bigger, right? And I love getting behind, like I said, things that are needs, not wants. This is a need. And I think it's a big one, right? So I look at this thing and I say, this thing, it would not take a whole lot to get to spark this thing to really, all of a sudden it's an inferno, right?
Yeah.
And I love your strategy. And I like, look, I don't know what it is about you Detroit guys, but you're
Not all Detroit guys.
I know, yeah, not all, but back east the guys. I guess maybe it's a back east thing for me. It's just like I can sense you're not here to mess around. You're not here to, you're here to get something done, right? In a big way. And you're not going to be resting on your laurels. I don't see that in you.
Yeah, the personality that I have and the personality of my guys, we'll do whatever it takes to get the job done, but we want to succeed here. And we feel we can see the turn now. Believe me, it's been hard work to get to this point, but the failure is not an option for us. We're going to go out, we're going to make it happen, and we're going to continue to do what we do. We're going to continue to push as hard as we can, and we'll be successful. If you've done this a number of times, it's always the same, right? I remember one of the startup companies, we had the Pace company, the SS7. We were like 6-8 months into the deal. We raised a bunch of money. And I remember walking by the operations guy's office, and he said, "When are you guys going to sell something?" And we were so upset by that. About 6 months later, the guy had hired 3 people he couldn't keep. He had to work 12 hours a day. It's a marathon here. You don't sign deals overnight. You're disruptive. You got to kick some doors in. You've got to get some customers, and then it starts to catch on. So this is a marathon. Even with the stock price, we've had some bumps in our stock, and when several announcements came out. I want to talk just briefly about the whole new car space real quickly. But we had some bumps, but what that does for us is every time we move up, we seem to find a new benchmark of where our stock price is. And so, we're looking at shareholders, we're focused on IR, but you have to have, for any CEO, if you don't have sales revenue stories, you're going nowhere. So you can have the greatest IR, you can spend tons of money on it, but if you don't have sales and revenue, you're cooked. So we're in a situation right now where we were a little ahead of sales over the last quarter, but now with, as I mentioned, the funnel, we're getting to the end of the funnel, we're catching up. We'll be announcing, we've announced, I don't know, maybe 10 distributors, 7 or 8 customers so far, but the rhythm will start and the cadence will pick up, based on where we're at. So let's go to, if you go back to September, our stock took off because of an article that was published, and it came from the car manufacturer space, where they were looking at putting, you mentioned this earlier, Tim, alcohol detection inside vehicles.
Okay.
So brand new vehicles. So I talked to you about telematics. The same kind of technology that we have could apply as one of the options to test alcohol in new vehicles. And we're, again, not promising anything, but we are in conversations with a number of large OEMs and a car manufacturer about doing testing with our technology, which, again, where could that go? Not sure, but we think they'll need multiple technologies in order to get a BAC reading. You're not going to get it without it, but we hope that we would be one of those. And we're going to be involved in that, probably starting in the next 3 to 6 months. So it's great that they reached out to us, right? They found us,
right,
because of that article. So that was good.
No, I think this is an exciting story. And in this particular market, this is, it's been a tough market for small and micro cap stocks for the last 24 months. And I think we're closer to the end of that than we are to the beginning of that, right?
Yeah. I hope so.
You got valuations that are the lowest in history for the small cap market, right? So I think this is a very exciting time, and so I look at technicals. I'm a fundamental guy, but I had to understand what technical guys look for. So I went and took a technical course, and now the very first thing I look at is technicals.
Yeah.
But I'm
Yeah.
still that fundamental guy, right? And it's what's interesting is you had this big run recently, which was what, February, right? Big run, and you head up to about what, $3, which is a round number. Round numbers are big psychological things for people, right?
Yeah. Yep.
You hit 3, and you went there very quickly from $1.50, right?
Yep.
To 3.
Yeah.
It needed to breathe, but you went there on pretty big volume. You can see the big volume spike here.
Yeah.
You get several big volume spikes here. And now you get in this kind of cup with handle looking formation. So you're right on top of the 50-day moving average, which is, you came down, you kissed that, and you bounced back off of it. So you just closed your financing, which is was convertible debt, right?
Yep. Yep. We replaced the convertible debt that we have, which wouldn't, the stock price was too high. It wasn't going to convert, and we wanted to make sure that we would replace that so we could.
Yourself more runway.
Yes,
and,
exactly. Yep.
You know, you're sitting right around $2, which is acting as support, and the story is just getting started.
Yeah,
that's the exciting part. I love the fact that there aren't any revenues, because it's very easy to beat your numbers that way.
Well, up to this point, the only forecasters that keep their jobs when they don't get them are weather reporting. Weather limit. We can miss their forecast and still keep their job. Unfortunately, we can't. But we do have an aggressive forecast, and you know, we're moving forward with that, and we're monitoring on a monthly basis, and we've got a forecast, so we know what we want to do. The question is, Tim, is that when will I come out and say, okay, here's where we're going to be, and what we really need is a little bit more time to better understand the sales cycle, and then get these bands into the market. So we're still, again, we're 8 months in. We need another few months or so. I mean, I don't know if it's few or it's 4 months or whatever it is, but to really understand and make sure we understand the sales cycle and it's solidified, and then we can go out and start talking about hitting some numbers.
Listen,
so that's kind
I would much rather, Dave, I'd much rather have you be, would you stop? I would much rather have you be, you know, under promise and over deliver than an over promise and under deliver, right?
Yeah,
I'll take that.
That's not gonna happen from me. Do that. I never was in the penalty box as a hockey player. I don't want to be in the penalty box as a CEO. I don't like that place. You can't score goals if you're in the penalty box.
Right,
so
right. It's tough. I mean, I'm listening to you. You got 4 sales guys. There is so much room for growth here. It's like unbelievable, right?
Yeah. Which is why we got to get the licensing, because I'm not going to hire 300, right? So we got to get the licensing, and date the licensing. You got to have some customers. You got to be able to prove your story. So that, you know, that's all part of the process here.
So talk to me about the licensing real quick, because we haven't really talked about it. So what does that mean? Get the licensing.
So this would be, let's say you've got a company, and I'll just pick a company like, and I'm not having any conversation with them, but take a company like HID, right? They're out of Texas. They do ID badges, right? They do time clocks. They're about $1 billion. What's happening in that space right now? Nobody's going to offices anymore, right? And so badge, you know, their revenues have to be down, I would assume. I'm picking this out of the air. What if we were to add our product to their stack, and they've got an existing customer base, and we license it for X dollars a month and put their logo on it? I mean, on a per unit basis. And then we're never going to chase that market. So we're looking at companies that already have existing customers, and safety is a concern, and we could stack this on top of their product. So again, we've already had conversations, and again, you'll see some proof of this. I'm not guaranteeing you. You'll see something like this in the next 30 days, and you go, I gotcha. And that the reason that you and I get along, it has nothing to do with Detroit or Cleveland. We're Midwestern guys, and we all talk the same. We all act the same. East Coast guys are different. West Coast guys are different. Midwest guys are kind of the same guy. So my whole management team is Midwest, except I got one Colorado guy, Justin here. He's sitting in the corner, but I had to bring him on. He was smarter than all of us. Otherwise, I would have found somebody in Saginaw or Bay City or Muskegon or something. But anyway, we're predominantly Midwest guys and a few Division I athletes in that group, which is always good because you learn how to lose, not about winning. It's how to lose, how to regroup, right? So.
That's the thing, right? And that's why I love to hear people be honest about. I don't want to hear that you have nothing but wins. If you're telling me you got nothing but wins, you're full.
What are you doing here? What am I doing here at $2?
Right.
I mean, it shouldn't be here.
I mean, look, our best lessons are the mistakes we make, right? Those are the best learning opportunities. So
yeah, it's like, and I don't want to offend any of your subscribers, but it's like the guy that you meet and says, "I don't need to work, but I'm looking for a job." It's like, okay, you're gone. See ya. You don't need to work, but you're looking for a job. What does that mean? So, sorry, you're off the list.
Yeah.
Anyway.
No, so listen, I think this is an exciting story from a technical standpoint. I think this $2 area is an interesting area to see hold as support. If the market's overall, though, and this is something you always have to take into consideration, is what is the sector doing? I don't know that you necessarily can put you in a sector with anybody else. Would you say that?
Not yet. I think it's safety technology or maybe some kind of crawling into med technology with like all these bans that are out there today for sugar or whatever the case may be, but not yet. We tried, we looked at so many different comps and we couldn't find anything close to what we're doing right now. So I don't know if there's a sector yet, but I see medical pops up, but anything medical safety tech. But again, we're a SaaS product, right?
And that's
software.
One of my favorite business models is software as a service, because it's once you start landing them, man, those are contracts that are recurring revenue.
Yeah, they're long-term recurring revenue. It's good. Yeah, it's good for everybody. So yeah, but again, no, we appreciate your interest, and I have a lot of respect for you, what you're doing and how you're doing it. So if you have investors that really want to have a conversation, you could set that up with Justin Davis, and he'd be glad to walk them through whatever they need in support of, what you're doing with your guys. But Justin talks to new investors, existing investors every day. And I think we've had about so far this year, about 35 meetings. That's how we met you at Lytham. We met you through Lytham, right? Yeah. Which I called Lytham for the first month. But anyway, we met you there. And I think we've given about maybe 35, 40 pitches so far this year to high wealth individuals, small family office and funds, guys like yourself. And we're seeing a lot of growth in that area with our investor base as we kind of migrate from high retail only to smaller groups, and then we get to the second level. So we'll be talking to bigger investors, hopefully, by the late third, early fourth quarter. But again, it's a process, right? We can't get excited if our stock goes way up. We can't get excited if it goes way down. We got to keep signing deals. And you'll notice, Tim, that every time the stock moves up, it's based on an announcement that we've signed a customer and we've got revenue. So we've got an audience that's listening to us, and they're following us. They said, okay, they're rewarding us for our success. So we just got to keep going.
And this is the kind of thing. This is where look. I know everybody likes to bash retail investors, but this is the kind of thing that I think people can really get behind, right? And feel good about investing in it. Now they got a good understanding of the leadership and what you're all about, right?
Yeah.
This is something you can get behind, and whether or not, look, this is, short-term investing. There's going to be volatility, brand new company, but you got a smart guy and a smart team that's running the playbook here. This could be a real nice long-term investment that pays back in a lot of ways, not just the money. Right.
Yeah, well, you mentioned it earlier, though. We love retail investors, and there are many sophisticated, but the problem is they're trying to recoup this year what they lost last year. So they get in, they buy us at $1.50, we go to $3, and they make some money because they're upside down from the year before. But there are many sophisticated guys, and a lot of them around some of this paid research. Rob Goldman, who did research, he's got a good chunk of followers, and so it's just the conditions of the market this year that were affected by last year are causing the instability when you talk about 100% retail.
Right.
Years ago would be a different story, right? But it is what it is. So you still have to work to change that mix because it benefits everyone over time. It benefits the retail guys that stay in. You got retail guys that want to be in a long term because they want a 2, 3, 4, 5x. They're affected by the guys that are in and out. So it's it's an art, a science, and you can throw a dart every day. Justin and I say, what happened to our stock? Why did it go up? We don't know. But the relationship is always to revenue, though. It's always to signing deals because that's traction, right? The investors want to see that we're doing what we said we do. So,
all right. So look, you made a mention that in the next 3-4 weeks, you're probably going to see some. We're going to probably see. You're not making any promises. I know that.
Yeah.
But might see some interesting news that we get excited about.
Yes. Yep. I'm excited about it right now, but I can't tell you. But yeah, you might see it.
I understand. But if that happens, let's do a quick follow-up.
Right? I mean, no. Let's plan on doing a follow. I would say let's do a follow-up. Let's schedule something for the first week in April because that would be appropriate timing.
Okay, perfect. So ticker symbol SOBR, Sobrsafe. You can go to their IR. I mean, look, you don't want to buy the stock today, fine. I'm not telling anybody to buy a stock. I'm saying that this is a good story. You're on the right side of things. It's a software as a service company, predictable revenue model, brand new, 93% accuracy, huge TAM. If you don't want to buy it today, fine. Put it on your watch list. Sign up, go to their website, their IR, and sign up for email alerts. Pay attention to what's going on with the company. That's all I'm suggesting, right? I think this is one worth putting on your radar. And, let's see if Dave and his team can continue to execute. That's really what it comes down to. So I'm looking forward to an update. I think this is an exciting story. A very small amount of shares outstanding, fully diluted. What's the risk reward here? I think the risk is what it goes back down to. What's the lowest it's ever been? About 60, 70 cents, something maybe around there. Hold on.
Don't mention that.
We can mention that.
I'm shrinking right now.
No. Look, it goes back down there. That's a tremendous. See, for me, if you're an investor, that's a long-term guy, and you see the vision of this company and where it can go, that's an opportunity. If it went back down there, that's an opportunity to back up the truck. That's my view.
I agree.
Right?
I hear you. Yeah.
So, here, you get in here at 2, it goes to $1.50. Nobody's going to shake me out of my shares. You can take me to $1. What am I going to do? I'm going to double up. I'm going to triple up. That's my game, right? That's how I do things. And if you're worth your salt, nobody goes all in all at once, right?
Sure.
You gotta, but I have a good feeling on this team, and I got a great feeling on the product, and I think this one is worth paying close attention to. So we'll see what happens. First week of April. And we'll see.
Sounds good, man. Sounds good. Thank you very much for your time. We appreciate it. Thanks for following us.
You got it. Hold on one second.
Hey, thanks for tuning in to another interview here at Alpha Wolf Trading. Today we had Sobrsafe Inc. CEO David Gandini, ticker symbol SOBR. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? While you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.